Hello and welcome back to the Geordie Pig Investor channel. Today I have got my May portfolio update video. Apologies, this video's come out a couple of weeks late. I was actually on holiday at the back end of May going into June, and I have been having some downtime, so I didn't quite have time to get logged on and look through my portfolio. However, was still pumping money into my portfolio. So although you haven't been seeing any videos from me, my portfolio has blown up since the last time you've probably watched. And today we're going to go through how it went in May, what the returns are currently looking like, what the plans are moving forward. So if we have a little look over the last 3 months at the start of May, go back to the 1st of May here, we can see the portfolio was valued at £16,952. I had invested £16,285 and we had a nice return of around 4%. Now this 4% was very much down on the month prior, where we were up at around 5.5%, 6% and even 7% at some point at the back end of March going into April. But this is what you're going to have with your portfolios, and it's about riding out these waves and staying committed to the cause. Some people have been saying to me, well, you've now only got a 2.88% return on your current portfolio. You'd be better off in a 5% fixed saver, potentially, but this isn't taking into account the amount of dividends I've also received in my portfolio currently. That I have sold and bought stocks within my portfolio, and near enough every single stock I have bought and sold has been sold at a profit. So that is also some money made there. And then you've got the returns to add into this. Plus you've got the fact that I am building up an empire and a portfolio, something that I can be proud of and look back on in years to come, where I'm going to be receiving a lot of dividend payments throughout the year and hopefully be able to be work optional by that point. You got to remember as well, this is for the long term. I don't mind these stocks riding out and going down in price. Right now, down at 2.8% return shows me that a few of my stocks have been at great buying opportunities because they are down, and that is exactly what I've been doing. So if we go back to where we were before, had about £16,300 invested at the start of May. And then by the end of May, we can see I invested a lot of money during May, found some really good positions. And by the 31st of May, my portfolio was then valued at 19,400. So we can see that I invested, a very considerable amount of money, over £3,000 in the month of May. And that was my biggest ever deposits within 1 month. So I'm very, very happy about this. But obviously the returns have diminished down quite a lot. So by the end of May, my returns were down at around about 2.4%. But we can see in June we go, I have actually returned a little bit more than that right now, but it is at a very similar number. It sort of seems to be bouncing between around about 2.6 to about 3.2% right now. And like I've said before, this has just shown that I've had some great opportunities to buy. So over the last month of May, I did put a lot of money into the portfolio. We have a new position here opened up in BP, where I've now got 122 shares. We will continue to add to our Burberry position, although it is down a hell of a lot right now, although I am still a strong believer that this will recover. We can then see that I have some nice positives, but we do have Diageo, which is my weekly buyer, and that is now down a big 8%. So it is really at a nice buy price right now. Like I say, you look at the portfolio and think, oh, I'm down 8% on a stock, I'm going to be worried I've lost £120. Whereas if I see this as an opportunity to just buy more money, and hence why this week I actually have invested over £100 into Diageo. So if I was to scroll down and show you, we can see there it is. I filled a position this week at £103. I did the same last week because I just believe it is at such a good trading price and I don't want to miss out at these prices. We can see my Games Workshop position, although was up a hell of a lot at one point, is now basically level. So a lot of the British stocks have been taking a massive hit as of late. Greencoat UK Wind also want to take a massive hit. We know that also today that Legal & General has dropped massively. So if we have a look at the last week, it is now down 10% in the last week. But yeah, this is all just going to be giving me potential for more buy opportunities. We can see that I do have a few more red stocks in the portfolio, but I'm still very happy with how it's performing overall. I'm happy with the positions I've bought into. I've researched them, and I know that these positions are good, solid companies that pay good dividends and are going to increase the dividends over time. And that is what I'm mainly bothered about. Obviously, returns on the stocks is definitely an important part, but I believe that because I'm holding these positions for a very long time and look to hold most of them for 5 to 10 plus years, that I believe that they will recover in price and I will see nice returns. So we can see my 4 pies right now is always going to be my main core part of the portfolio, and this is exactly why. They're a lot more reliable. You're going to get those very, very consistent returns. And yeah, we can see how well all three are still performing, and I'm still investing my £100 minimum weekly into this. And then I pick out my stocks depending on what I believe is at good value week to week in these, and that is where the rest of my investments are coming from. So I am still very happy with each position and all the holdings that I do have in my portfolio. So this is going to be the May update video. Like I say, we've gone from having £16,300 invested in the portfolio to now having a massive £19,400 invested by the end of May. And I just believe that by building your positions and building the habits, this is what's going to reap the rewards long term. It's not always about saving money in a bank account, because that is very, very tempting and easy to spend. When I put money into this account, I know that that money is never going to be touched and it is staying in this account. No matter what happens to my house, to my car, if I want to go on holiday, I will be saving that money outside of the money that is invested here. Hence why I have an emergency fund. I did actually have a couple of car issues earlier this month as well. So it kind of all hit me at once, having car insurance payments, car repair payments, I had my MOT and service, and then I also had my holiday. So I've had quite an expensive few weeks. But this is why you have an emergency fund, so that you never have to pull money out of the main portfolio. And I can't stress that enough, guys. Make sure that you build that emergency fund up first, and you can cover any potential costs that may occur, so that you can continue to invest in your portfolio and allow that money to really get the snowball effect. So I hope you've enjoyed today's video. I'll also be doing my Invest Engine portfolio updates, so have a look out for that. That's quite an exciting one as well, as I've been performing very well in that portfolio, so that is going to be good to update you on. But the next portfolio update will just be around the corner, because I should get it out at the start of July for June. So look forward to that, and I hope you enjoyed today's video. Let me know what stocks you've been currently buying and any positions that you think I should be adding to in my portfolio. And this is the Geordie Pig Investor, over and out.